Good evening. Hi, it's Adil bringing you a review of the European markets from an inter-market analysis perspective. Okay, I'll try and give my take on the week's events, or more or less Friday's events as a day trader. All we care about are the last 24 to 40 hours ideally, unless there's some real important policy making event or any real shift in rates, for example, or the inflation outlook or the GDP outlook, then obviously that has a longer lasting effect. But for now, the focus really remains on geopolitics. So the Russia-Ukraine situation and the Israel and Syrian situation is highlighted at present. Then we also have socio-economic concerns, so the situation in Greece right now, or Brexit fears, so to say, that remains certainly the main concern. Also the interest rates, surprise or sudden interest rate reduction in Russia, or again that certainly poses a concern with regards to emerging markets. Okay, so these are the main concerns. Add in the fact that we also have the weaker GDP reading out of the US, and we had weaker retail sales out of Germany as well during the day. So these are all factors that are at play. Add in the fact also China certainly is under immense pressure now with regards to its crackdown on margins, okay, or margin trading accounts. So again, these are all concerns. Okay, so that's what we're going to be focusing on. Also, with regards to the failure of the yen to actually fall as well, with regards to BOJ obviously standing pat, and I'll be discussing that as well. Okay, right, let's start. Okay, so first of all, going into Monday, the main driver will be the US, obviously, or the US sell-off, so to say. If I bring up a 10-minute chart of the S&P 500, you can see here towards the close here, we can see we sold off quite substantially. Just give me 1 second, bear with me, and let me just see if I can do something. 1 second. These pop-ups that keep coming up, notifications. Okay, that's fine. Okay, so basically you can see here we tested the resistance level from Thursday. The market's obviously pushed higher, short squeezed higher on potential news that there was going to be a Greek deal or potential deal with regards to Greece. Also, the argument there with regards to a lower GDP was being interpreted as interest rates obviously no longer being hiked in June, as Mr. Bullard keeps stating, or other Fed members or the FOMC minutes alluded to, or the perception of investors. That's the illusion, or that's the belief that it will be in June, and the hawkish rhetoric out of the Fed will maintain itself. Although my interpretation of the FOMC minutes was that it was neutral stroke dovish, and Miss Yellen had to obviously leak out, or there was a report with regards to Miss Yellen speaking to a Democrat and leaking, well, basically it was intentionally leaked out that investors had misinterpreted the FOMC minutes, and that she actually stated that there will be no rate increase in the foreseeable future. Okay, not at present anyway. So what does at present mean? Basically, she's challenging the status quo, or the thought process at present, that there will be a rate increase in June. Okay, so that caused the markets to sharply rally on Thursday. As you can see here, quite a stellar move. The Nasdaq itself had a 100-point move. So when you have a move like that, then obviously that's the QE or the hopium trade or the central bank put trade. So if you know the rates are not going to increase, so this sell-off here that was based on the fear of rates increasing was retraced to quite a significant percentage. Okay, more than almost a 61% retracement. Okay, of that sell-off post FOMC minutes. Then we had a sell-off based on weaker GDP here. Then once the markets realised that we had the Yellen put in place because she leaked out yesterday or the day before that basically there would be no interest rate rise, and the market started to propel higher. Adding the fact that you have a weaker GDP, that again adds weight to the argument that there won't be a rate rise anytime soon. Adding the fact that there were some bullish arguments with regards to, or comments with regards to Greece coming to some sort of agreement. It seems that those same agreements were basically counteracted or rebutted, or even Miss Yellen's statement could have been declined or basically retracted, etc., etc. And that's what caused the S&P 500 to sell off almost 25 handles in the last, let's just say, last hour and a half, basically going into the weekend. Now, was that sell-off based on Yellen's retractment? We don't know. was that that sell-off based on fears over Greece over the weekend and the uncertainty regarding the gap on Monday, potential massive gap down. We don't know. Okay, I'm just presuming so. Okay, now if you look at a 60-minute chart, and this is quite interesting, folks, the support again is at 1990. If we correlate that with the USD JPY, you'll see it's almost identical. Look at the 60-minute chart on the USD JPY. Okay, so it's very important that you watch the USD JPY to find out what's happening with the US markets. If you know what's happening in the US markets, you can project that onto the Asian and European markets as well. So it's very, very important to watch that correlation with USD JPY and Euro JPY as well. Okay, although Euro JPY is distorted now to a large extent because of the Euro side of the equation, such as ECB QE. Okay, right. So now that we know that there's a sell-off or risk-off scenario going into the weekend, that's going to be very, very important. Okay, so to interpret risk off or risk on. Now we'll watch the Asian session, and obviously I'm a day trader, so the Asian session price action is very important. I'll pick up my clues from there. If it's bullish, I'll go long. If it's bearish, I'll go short. Okay, so now over the weekend we have had an article on Bloomberg stating that Greece will repay ECB, IMF, reach deal with EU, Tsipras says. Greek Prime Minister Alex Tsipras sought to repair relations with creditors after a week-long sell-off in bonds and stocks, and we were welcomed by Euro area officials concerned they were headed for a showdown with the bloc's indebted nations. So this is a bullish article, and this is bullish for markets. Now, with regards to the actual Athens market being down 1.6%, expect a gap higher. Any news of an agreement or reconciliation or any news of working together, especially after we've had articles upon articles about no Greek debt, no Greek haircut, and Greek debt will not be will need to be paid, and there will be no write-off, etc., etc. Now there seems to be a backtrack, and there seems to be some sort of closed door deal, especially with regards to the fear. And this is one of the most important, I think, variables in this cog or in this equation. And this is where Mr. Tsipras is very, very intelligent, and he's basically played his cards perfectly in saying that, or in threatening Europe, that he will realign himself with Russia. And as we all know, there's sanctions on Russia, and also Greece seems to be a variable within the Eurozone, because one of the rules is that all the Eurozone must agree. And obviously if they disagree, then that creates a massive problem for Europe in terms of their stance with regards to Russia and Ukraine. Okay, so that's certainly a variable that needs to be taken into consideration, especially with regards to the Russian central bank cutting interest rates on Friday, which surprised a lot of individuals. Okay, and also given the fact that the Russian-Ukraine situation seems to be escalating, and also we have the concerns with regards to Israel and Syria at the moment as well. There's skirmishes there between the two, and obviously Hamas is involved, and again that creates the geopolitical imbalance. Okay, so that's certainly a concern, and obviously the weaker GDP is a concern as well of the US, and we'll see exactly how that's interpreted, whether you want to go with the bad news equals good news or good news equals bad news type scenario. Again, that's going to be discussed with the backdrop of Yellen stating that interest rates aren't going to rise. If the GDP confirms that interest rates are not going to rise, then that certainly basically gives the QE or by the dip traders an argument to certainly go long, because rates will certainly be pushed back. Okay, so it depends on what the market is trying to interpret the GDP numbers to be and how it interprets the GDP numbers. Okay, and now with regards to Europe, it has the QE put. Okay, so I personally will not like to be overtly bearish on Europe. Okay, even though the charts, which I will discuss shortly, are indicating bearishness, and those charts will need to be confirmed with some fundamental catalyst. Okay, which I'll discuss very shortly as well. So the ECB put is there, so always bear in mind that whenever you have a bearish scenario, you're only feeding the short squeeze, and you're feeding the bears are feeding the new highs in the European markets. Okay, so again, it will be a combination of geopolitics and socioeconomics. Okay, and that's basically what will dictate the market. Now, given the fact that one of the biggest concerns has been Brexit fears, and given the fact that this chap is now working with the IMF and the EU and the ECB, this is good news. This can only be good news for the stock market. Okay, can only be good news for the stock market. One of the general sentiment indicators or understanding of what's happening is just going to the main pages, really. Wall Street, Reuters, you can read Telegraph if you want, it's up to yourself, and just gauging what are the main articles or the headlines that are being talked about. Germany, ECB play hardball with Greece. Russian government sees 2015 GDP down 3% more optimistic than other forecasts, etc., etc. So it's all about global growth phase. Okay, that's one of the most important things in emerging market concerns and so on and so forth. Okay, so I've summed up the fundamental arguments. Now let's have a look at the technical arguments, and then I'll try and bring in the fundamentals and give you an insight with regards to that. Okay, now let's have a look at the German DAX, because that's the driver. Okay, German DAX, let's have a look at the weekly chart. As we all know, I mean, going back, I mean, if you even bring up a yearly chart, I mean, it's been one hell of a move higher, and there's certainly no argument here for a potential pullback. I mean, whichever time frame you look at, even if you look at a monthly, weekly, certainly no argument at all. Okay, daily chart, certainly one can argue for a short term, yes, because this is either we're having bullish consolidation here, or it's a failed move. Okay, so either we have a bull flag scenario, or we have a failed bull flag, which creates a long squeeze. As we all know, a failed bullish pattern generally indicates a move in the opposite direction. So given the fact that you have an unfilled gap below, that certainly will be a concern. Now, what can cause that scenario? The scenario that can be caused there is, number one, a higher euro. So whether the German bank starts to challenge the actual power or influence of the ECB, again, that could create a short squeeze, given the fact that the dollar is quite stellar at present. I mean, if I bring up the US dollar index, let's just observe dollar index. Here we go. Okay, so the US dollar index at the moment, 2 doji candles there. That's important. Looking at a 60-minute chart, again, we have unfilled gaps below, although we do have higher highs and higher lows, so certainly needs to be respected. 10-minute chart certainly did pull back on that weaker GDP number, and obviously Miss Yellen's leak as well with regards to the Democrats she spoke to, and reassuring him that interest rates were not going to rise. So the 4-hour chart certainly looks bullish. Daily chart, although cause for concern because we've had 2 dojis in a row now, that's something that we're definitely going to be discussing. That's something to keep an eye out for. Okay, that's something that we're definitely going to be keeping an eye out for. Okay, so that's going to be interesting, very interesting scenario. So given the fact that we are in this bullish channel, one can argue that we are going to break out of this bullish channel to the downside, and that is going to lead to a euro rally. A euro rally will hurt European exports, and that will basically be the catalyst for this German DAX to close this gap below. Okay, as traders, you're always thinking like you're thinking on a chessboard. You're always playing against your opponent and seeing how you can obviously get him into check and checkmate him, or obviously prevent yourself from being checkmate as well. So you're always trying to defend. In other words, you're looking for every potential scenario or outcome. So plan A needs these requirements to occur. Plan B needs these scenario or these certain variables to come in line, so on and so forth. So I'm just giving you one scenario for the bull flag to fail and for the long squeeze to occur, and obviously hit gap or retest the breakout. Obviously that dollar chart certainly is telling you some type of signal or giving you some sort of clues. Okay, but having said that, the ECB put is very, very powerful, and the euro is very hard for the euro to actually retrace now. From my perspective, unless, like I said, there's a challenge with regards to the influence of the ECB, which at this very moment in time, with regards to inflation obviously still being quite depressed, it's very, very hard. Again, we have to be open to anything. Okay, we can't remain stubborn in our opinion or our approach or our outlook on the markets. We just have to be flexible and be willing to move very, very quickly. Okay, right, the daily chart, as you can see, it's not exactly a promising sign. 60-minute again is not a promising sign. Now this is a prime example of the QE effect. As you can see here, we had a beautiful we had this trend line, we had a breach of the trend line, we retested this neckline, we created a nice right shoulder. What happened? Bang, the right shoulder failed. Okay, we retraced more than, generally speaking, I always look for a retracement of on the right shoulder no more than, say, a 50% or a 60%, and we basically retraced both. Okay, so whenever you see a bearish pattern, especially when you have QE in the background, it's very hard for that to actually play out. Okay, that's why it's important not to become overtly bearish and be very, very flexible. If the pattern fails, don't be stubborn, don't keep shorting. Okay, don't give your money to the central banks. Okay, that's basically what you're doing. You're fighting the central bank. So it's very, very important, very, very important. Okay, to be flexible. So that HNS failed, and obviously we had a short squeeze, and that's generally what's feeding the markets to continue to make new highs. Although I was surprised that the German DAX did hold that double top, but that certainly needs to be respected, and that's our benchmark for now. So if you break past the 10,800 level, obviously back into bull mode. ECB put is there. Keep buying the dip. It's basically a summation from that perspective. Okay, so keep buying the dip. Keep buying the dip. That's basically the summation. Okay, but for now, double top or so double top and we drop. But again, like I said, don't get too excited because it's all about the ECB put and the QE in the background, and we're not going to be fighting central banks. Now, with regards to the German index, as you can see here, you have this left shoulder here, which I've already highlighted in a 60-minute chart. You have a right shoulder, and down you go. What the important thing really here is, let me just get rid of all these other lines. Okay, is that we have this unfilled gap below. The unfilled gap below is at 10,435. The neckline is at 10,800. Sorry, the head is at 10,800. The neckline's around the 10,650 level. You're looking for a 150-point drop, so you're looking at around 10,500 target. Now, with regards to the German DAX, given the fact that it's one hell of a volatile beast, that 10,435 certainly is bang on for that HNS formation to actually occur and obviously come into fruition. Okay, so that's going to be quite interesting and very, very important. But again, what are the scenarios for that? One, like I said, a rapid appreciation in the euro, thereby undermining any QE. Number two, it's going to be the Grexit. Okay, so what if the ECB and the IMF, and i.e. the ECB, obviously the IMF and the World Bank as well, or whoever these individuals are that are going to be supporting Greece, decide to back off? Okay, and what if Greece realigns itself with Russia? Okay, who was the first individual that Mr. Tsipras met after he got elected? It was a Russian individual. I'm not sure if it was a Russian foreign minister or whether it's a monetary or finance minister. I can't remember now, but that's one of the most important things that he did. Okay, so that certainly was sending a signal to Europe that basically, if you don't forgive our debt, okay, then we will obviously realign and go elsewhere. And there has been talk with regards to Russia bailing out Greece. So these are very, very interesting times, and certainly every scenario is possible. So don't be stubborn and looking in one direction. Now, we have had a rally over the weekend in Spain, and there certainly seems to be a movement in Europe towards the left, adding the fact that you've got all these extremist and radical parties popping up now that are anti-immigration and so on and so forth. Certainly doesn't bode well. Okay, certainly does not bode well for Europe and its ability to remain as one. Okay, so this is basically the situation that we see with regards to the German DAX. So that certainly needs to be respected. Now, the French CAC, again, let's just have a look at that, and it seems to be very similar with regards to the actual German DAX. We have broken out on the previous high. It looks like we're consolidating for now. A doji candle on the weekly chart, again, that certainly needs to be respected. We've had 3 red candles now at this high, so either we're consolidating here for a move higher or we're breaking lower. Again, it's up to yourself. Do your research. Okay, 60-minute chart. We failed to make any real higher high. One can argue it's a sideways consolidation before the next move higher, or alternatively, we're coming back to retrace the 4,400 level. So again, that certainly needs to be taken into consideration too. With regards to the French CAC, we failed to make a higher high. We've held that double top resistance there. And you're looking for a left shoulder, looking for a head there. You're looking for your right shoulder there. And the market looks to move down. Now the head is at 4,660. Your neckline is at 4,590. So you're looking at a 70-point move down. That basically gets you into gap fill. Okay, so that's going to be very, very interesting. So again, like I said, I'll be lookout. I mean, technically the pattern is there, but again, I need a fundamental catalyst. Okay, I mean, one could argue, yes, weaker GDP out of America. The sell-off late Friday session may well obviously feed through. If the USD JPY breaks that support level, which I've highlighted. So for example, just giving you all these potential scenarios here. If this USD JPY breaks lower, that's your early warning sign. Okay, that will lead to the US markets breaking lower, and then obviously Europe will have to follow through. Okay, now again, add in some geopolitics, and the situation doesn't exactly look very bullish at all. Okay, so again, these are all potential scenarios that could occur, that could lead to this HNS formation coming into fruition. Okay, so always bear that in mind. Okay, so the 60-minute chart you observed as well, and certainly either it's consolidation or it's a move lower. Okay, Euro stocks 50, very important to look at. Okay, so looking at a daily chart, again, we've closed that gap. So one could argue that we've closed the gap now, consolidated here, and we're looking for a potential move higher. Now, if we fail to hold that gap, then the next level is the 3,300 level and potentially below. 60-minute chart, again, we've failed to make any real higher high. We're just consolidating here. We've closed the gap. So either it's a bull flag or it's a failure, and we go lower to test the 200 MA. Okay, 10-minute chart, again, same type of pattern. HNS formation certainly there. You've got this unfilled gap that needs to be closed at 3,322. So again, watch out for the gap below. Okay, if that gap fails to hold, and obviously we may well go lower. So again, at the moment, it's lower lows and lower highs. Go with the trend for now. Okay, so that's the European markets from that perspective. A wrap up. I can just quickly have a look at the FTSE for you. Now, the FTSE daily chart, very interesting. We have a retest of this previous breakout here at 6750. So if 6750 fails to hold, then the only support level that I can see thereafter is going to be in this zone here. So it's either going to be 6640 or it's going to be the 200 MA at 6675, and that will be your support zone in the interim. Other than that, I can't really see anything. I mean, you've got a potential support zone there, and that's basically it. So it's either 6675 or 6650 region for the FTSE 100. The 60-minute chart, we've broken out the bullish channel. Either we're consolidating here for our next move higher, or we're going back and retesting this 200 MA, which is around the 6600 level, and that's all I can see for now. Potentially previous resistance equals support. That's all I can see with regards to the FTSE. Although having said that, the oil price did start to rally late Friday, so we'll see exactly how that occurs. Well, what occurs with regards to that. Obviously, the Israel-Syrian situation started to escalate, and the Russia-Ukraine situation is still there as well. Although having said that, the cut in interest rates may well help, and in Russia certainly may well have helped the price of oil. Okay, so I think that's a wrap. The main, like I said, the main catalyst driving the Monday markets will be the deal with regards to Greece. If you continue to get positive headlines out of there, bias remains bullish. Okay, and we'll see exactly how the Asian market moves, and that will hopefully dictate. But you know the patterns now. Watch out for those patterns. Watch out for the gaps below on the European indices. And all we're looking for now is bearish arguments on the downside. If that doesn't occur, then we know the ECB QE put is there, and that will create a short squeeze for all those traders that are attempting to trade the short patterns. Okay, so bear that in mind. The cannon fodder is going to be the bears. Okay, given the fact that you have got the ECB QE put in place. So the news flow and the catalyst has to be overtly bearish to really create that panic and a sell-off in European equities. Otherwise, we just constantly rip higher. Okay, rip higher on a short squeeze. Okay, folks, as the shorts throw in the towel, given the fact that they're fighting the central bank. So always bear that in mind. Don't get too bearish. Okay, although having said that, you can't really be influenced by central banks either. We're traders, we're day traders. We put our stop losses in. If we're incorrect, stops are hit, we move on to the next trade. I mean, take last week an example. I was minus 120 by Wednesday, and obviously turned it around to end up with 130, 140, 150 for the week. So it's very, very important to look at it from that perspective. Okay, folks, so risk on, risk off, wax